All right. Welcome to the Freedom Culture. Here at the Freedom Culture, I like to discuss current events in the financial sector, cryptocurrency, and blockchain technology in the most understandable tone possible. In a conversational tone. I like to keep it real. You feel me? Like I seen somewhere that only 13% of America's population is invested into cryptocurrency. So I could imagine about like 87% feel outside of the bubble, kind of don't know what's going on when these big news happen. Now, this FTX situation is a big hot topic. It's kind of like it's a lot of collateral effects that could come out of this, and it's kind of sheds light to how things there's so many wrong things going on here.
This Sam bankman-fried is a liar and a crook. His personal crypto FTX token was basically a Ponzi scheme hidden below layers of Moonbro jargon. He even went on Bloomberg's podcast and bragged about it. Yep, that happened. He used his Ponzi token as collateral to borrow billions of real dollars that he couldn't pay back. He then used those real dollars to build an empire out of dying companies like Voyager and BlockFi. This led Jim Cramer to call him the new JP Morgan. That's weird. It's not like Jim Cramer to promote a billionaire con artist. SBF sold people cryptos like Bitcoin, or so they thought. What they really bought from SBF was an IOU. But as long as everyone didn't cash in their IOU at the same time, the scheme worked. Until it didn't. This other a-hole who hates SBF came along and engineered a bank run with some passive-aggressive tweets. It worked. SBF didn't have enough money to repay everyone at once, and now his customers have lost everything. He'll be happy to know that this is exactly how every bank in the world operates. So where did all the money go? He misappropriated $4 billion trying to save his failing hedge fund. Whoops, that's a felony. He spent $21 million on Super Bowl commercials, $5 million for the big guy, $40 million in campaign donations. I wonder what he wanted in return. And everyone who's pointing at this story and saying, this is exactly why we need to regulate crypto. Remember that SBF stole billions. That's already a crime. And he spent a lot of it on bribing politicians. Also a crime in order to create a crypto monopoly for himself. Government regulations don't protect the customers. They protect the crooks.
We live in this thing called crony capitalism. Crony capitalism is basically large companies and corporations investing in the outcome of the election and make sure that it works to their benefit. It's called lobbying. It's kind of this term that I don't understand why it's not a big deal. You feel me? It's what the left does. A proper definition for crony capitalism is a term describing an economy in which success in business depends on close relationships between business people and government officials. So pretty much it's a high level bribery, high level bribery. I'm a look out for you now so you can look out for me later, So the plot thickens with this case, this FTX.
The Democratic Party finds itself in the middle of the biggest financial fraud case in U.S. history. A cryptocurrency company, like the Bitcoin things, just lost $2 billion of its customers' money. They didn't just lose it in the market, it's just gone. The Wall Street Journal reports FTX was cracking into customers' accounts and using their funds for other stuff. And then when customers wanted to withdraw their money, a lot of it was gone. Think he was too big to fail because he had regulators in his pocket? Probably. I mean, you're bulletproof when you can buy politicians. And this guy was planning on buying Biden with $1 billion. Democrats send money to Ukraine. Ukraine sends money to FTX, and FTX sends money to the Democrats' campaign.
I was trying to think of a good example of a trade where I've lost a ton of money. Well, I don't know. I probably don't want to go into specifics too much with that.
By the way, that was Minnie Madoff's girlfriend. She was living in a penthouse in one of the world's famous tax havens with him in the Bahamas. There were 10 kids working in this office, and they were all sleeping with each other. It was a polyamorous penthouse. It's what you call a pump and dump scheme.
But I want you to flesh that out for me so that I fully understand. So the idea is donations, or not donations, it's outright theft, I would assume, from small investor or investor accounts into FTX. Was funneling money then into Ukraine, or was it people knowingly contributing to Ukraine through FTX, whatever the mechanism, but then money then in turn funneled back to Democratic politicians who are, as you mentioned, voting to fund bigger funding for the United States government towards Ukraine?
Right. So a lot of the aid that U.S. gave to Ukraine in this war has sort of magically has a tendency to sort of vanish without a great deal of transparency about what happens to it. And the allegation is that a lot of this money was deposited with FTX, which in turn was given back in the form of campaign contributions to Democrats. And I mean that sort of thing that is really gritty and really ugly and it definitely needs to be investigated. But, if you play nice with government regulators, you can get away with a lot of other things.
The sentiment right now is run from crypto. However, I'm still big on crypto. I'm heavily invested in crypto. It just doesn't make any logical sense to think that crypto is going to go away.
Some giant player is going to zero because this is the first time applying leverage to an asset class that most people assumed wouldn't be this volatile, but has proven to be volatile yet again. And I say all this, and it's important that this happens. It's bad for the individual investors, but in the context of making this market more educated, more institutional, more stable, with better price discovery and less leverage, you need these players to go to zero. There's so much unknown in this situation, and as you pointed out wisely, that this is like an onion being unpeeled. But from my point of view, watching what investors do at the institutional level, this is going to help quite a bit in stabilizing what the rules are going to be, because crypto is not going away. And that is still of great interest to institutions that still won't invest in it because they don't have a platform to do it on. For me, it's moving under the Canadian order. I'm going to stay there until you can show me policy.
What this is to me is more of a reason to regulate. Now, kind of like when it comes to solving crime and stuff, sometimes you let the little guys fly. Sometimes you let even the big guys get away with so much crime until you find the right time to pin them down. Now, I don't understand how this guy Sam Bankman-Fried. See, I don't even know this guy like that. I never even knew what is SPF. That's a new crypto or whatever. I never knew what this, because I never paid any attention. I only pay attention to regulatory compliant cryptos. Cryptos that's already on the right side of things. Cryptos that's focused on being regulatory compliant. So when it goes to court, then, it's no issues. Look at all this madness going on, but we got XRP, one of the most cleanest cryptos in the courtroom. The SEC is supposed to protect retail investors, but they got the most valuable cryptocurrency in the courtroom instead of putting all these guys in there. It's like ridiculous. So billions of dollars has been lost. And in my damn time, it's amazing just seeing the word billion just get tossed around all over the place. It's just like, it changes my perspective of money. But so now there's gonna be more of a reason to regulate. So you hear the White House talking about it.
Without proper oversight, cryptocurrencies, it risks harming everyday Americans. So this is something that clearly we monitor and that we see as an important issue. But the most recent news further underscores these concerns and highlights why prudent regulation of cryptocurrencies is indeed needed. The White House, along with the relevant agencies, will again closely monitor the situation as it develops.
So they're trying to make central bank digital currencies look great and cryptocurrency look bad. So they need these dramatic events to happen, these black swan events to happen in order to scare the people away. This is a big shakeout. Now CBDCs is it's really helpful for the issue that they got going on. They got large amounts of debt going on. They got, I don't owe nobody, but the government got large amounts of debt going on. And, they got a liquidity crisis and all of these things. Now, instead of a fiat system, a paper currency system, which is a Ponzi scheme itself, this is just fake. Everything is just fake. They just printing money out and stuff like that. Like, imagine having a printer and, oh shoot, you ran out of money in your pocket, so now you just go ahead and print more money. Now with CBDCs, they could just type more money. You know what I'm saying? If they got a whole lot of debt, they could pay back the debt and tip if they want to. Just $1 gazillion. Hit send. And they're gonna use XRP to do it.
Here's how it works. Each nation's CBDC is hosted on a private version of the XRP ledger. Access by participants is granted by the administrator and fully secure. Using Ripple's CBDC solution, the central bank has full control over supply, allowing them to increase supply or redeem it. And through a standard API and multiple SDKs, integration into existing systems is simplified and suitable for traditional and non-traditional participants. Additionally, the central bank can issue other assets and allow participants like commercial banks to do so. The central bank can also authorize who holds the currency on the ledger, whether that's held directly by consumers or through commercial banks. Transactions typically settle in seconds compared to days, making CBDCs suitable for use cases like retail points of sale. This can open the door for real-time salary payments and collection of tax at point of sale, which gets funds to an institution or a consumer faster while eliminating debt risks. CBDC data is fully controlled and auditable by a central bank, allowing for its analysis in support of monetary policy. And the data maintains transaction privacy while still allowing for regulators to monitor for criminal activities. Finally, a Ripple-designed CBDC can provide a means to bridge disparate currencies through XRP. Its inherent interoperability can allow for connection with other central bank ledgers for efficient cross-asset and cross-border transactions. This can be done with cross-issuance, using XRP as a bridge currency or via cross-ledger communication protocols. This reduces the risk that institutions are forced to accept when transacting across multiple networks or currencies in the current system. The creation of a CBDC provides powerful benefits for the economy and people of an adopting central bank. It's technology that places trust in digital money in the hands of a central bank that can guarantee accessibility to funds and the resulting services, as is the case with cash today. The result? An improved foundation for global financial development where businesses, commercial banks, and ultimately people can unlock new economic potential. Work with Ripple to build a custom pilot designed for your country or institution today.
Really? So that's why XRP is right now in the courtroom. And they're dealing with this lawsuit, and I won't be surprised that there's going to be a settlement really soon because of the sentiment right out here right now. You feel me? So the price is, easy $10, but and right now it's like at 35 cents.
Very high price. Very high price. And the reason also is because I posted a good tweet the other day. I don't think it got retweeted that much when it should have, But I was talking about if XRP is going to replace the financial systems, right, in place, and it will, the price has to be very high because there's not enough coins to supply that, for that demand, the global demand. So it has to be really high. And that's really the easiest way to put it because it's true. The price will have to be high, and they have to be reevaluated for all the damn debt we have. It's not just going to go away, resetting the system. I mean, they keep money and raising the debt, man. The higher the debt is, the higher the price of XRP has to be.
I talk about CBDCs a lot. You can look in my videos. I've mentioned CBDCs a lot. It's really it's not scary to me anymore. However, the reason why is because I know I did the research and I learned ways to work around it. Currency is current energy. I don't get scared. I don't get worried. I mean, as a matter of fact, I'll buy more. Right now, I would buy more XRP. I'm actually looking forward. I would buy more ISO 222 cryptocurrencies. ISO 222 cryptocurrencies. These are coins. These are the cryptos that the big wigs are already into. So they need everybody that don't know how to think for themselves to run away from this thing. You know what I'm saying? Because they don't want you to win. They don't. Imagine if they really did want you to win. They don't want you to have power. You feel me? It's just the way it is. But I ain't want to speak too much on this. I got a whole lot of other things that I gotta work on. But I just wanted to put that out there. Put my little 2 cents on this spin. This is just a big event, a big reason for them to regulate, which is good, but it's also bad because CBDCs are coming out more fast. You know what I'm saying? That's my perspective. And they wanted to shake people out. That's my perspective.
Many people are using cryptos just to buy and sell and make quick gains out of it. Does it hurt the growth of cryptocurrencies, that usage for a quick buck?
So it's kind of chicken and egg. You have to create a marketplace. And right now we have about 150, 200 exchanges around the world that trade in XRP. a lot of it, as you say, is very shallow trading by individuals, and that is not the use case that we are pursuing. What we are pursuing is the use of XRP as a financial asset by sophisticated institutions as a bridging mechanism. So does this hurt or harm? Well, it creates a lot of noise. And, we certainly don't want that much noise, but we're waiting. And for example, this last quarter, the bulk of XRP sales were to institutional investors. And as this transitions away from retail to institutions who start to use it for wholesale, financial usage, that's when the turning point will come.
When you already know the tricks, you're kind of relaxed. You know what I'm saying? I'm relaxed. So, anyways, that's all I'm gonna say. Look out for my next video. Just wanted to touch on that subject real quick. Don't be afraid. Get paid. Have a nice day.